Good afternoon, traders. This is Tony D from easyMarkets dealing room here in Sydney. We've got ourselves a NFP day again. Now, this NFP is generally regarded as the biggest trading event of the calendar month. Each month, first Friday of each month, you do see the US jobs numbers come out, and basically sets the tone for how the traders are going to be looking at the Fed and the unemployment situation in general. These days, it's not so much the headline number that's really important. It has been a fairly static 150 to 250 sort of number for the past few years. What's really important when it comes through in the current market is the average hourly earnings. Now, the average hourly earnings is a form of measuring wage inflation. Now, this wage inflation number is very important at the moment because the big debate they got with central banks around the world is why is there no wage inflation? Now, if you are going to get wage inflation, then that's a good part of inflation. That's inflation which does feed through to higher demand and higher prices throughout the economy, and it's the sort of inflation that they want to propagate. You see that very much in all the Bank of Japan's, almost forcing the government, trying to mandate, the companies increasing the wages of the staff just so they can get inflation that's a more permanent basis. So one of the ways that we can get inflation to come through in the world is if you start to see inflation in wages. That's real inflation that can't be slowed down. It's very hard to cut wages once you raise them up. So the wage inflation debate at the moment is crucial for how many times the Fed is going to be raising rates this year. Now, if we do get stronger in wage inflation here, then it's almost 100% certain they're going to raise rates again in March, given the FOMC statement that we got last night. It's also Wednesday night. It's growing in importance. So it's a number that, if it comes in strong, and the headline number, which is expected to be 180,000, comes in at 130,000. That's a weak number, and that should cause stocks to go down, US dollar to go down. But if the average hourly earning beats and surprises at 0.4 in that same scenario, what you'll see is a very classic non-farm payrolls whip. That's where the US dollar bounces back very sharply. Everyone's like, what's going on, what's going on? And then everyone will see that the wage and average hourly earnings is a lot stronger. And then they draw the dots with what that means for the Fed. So it's very important that you do keep an eye on both the headline and the average hourly earnings, and then if you really want to have a look at what causes all this volatility in the market after the NFP for the first 5-10 minutes. If you're seeing that the market reacts strongly and then sharply reverses, so if it's a really strong number, 250,000, and the market goes straight up and then starts to come back down really, really sharply, right? Then go have a look at the revisions, right? The revisions for the last few months. If they show a sharp reduction, then that's another excuse the market can use to do this classic non-farm payrolls whip, which is where you get the market going up and then down, making new highs and then new lows on the day. And it happens so regularly that you have to be aware of what can spark it if you're going to be trading tonight's main event. For those who haven't not traded before, the NFP, it's one of those situations where you want to just watch, maybe not trade. You want to just sit on the sidelines and watch the action, and then sort of learn from it. You really want to watch 2 or 3 of them before you step into what is probably the hardest event to trade for professional traders. Many traders just do not trade NFP because of this event. Because of the amount of whipping, amount of two-way action. It is a challenge, but it is also very exciting. You don't get this much volatility on normal trading days. For those who want to have a deeper discussion with me, do come through on the links below. Before we finish up though, we just want to have a quick look at what's going on with the positioning of the US dollar into this announcement. So the US dollar is really close to multi-year lows. There's been a resurgence of US dollar selling in the last 3 days, and so we're back at 88.50 on the dollar index. Now remember, the dollar index is the key index that tracks the US dollar strength or weakness. It's a basket against all the majors. It doesn't include the Aussie dollar though, but regardless, it does have the majority of the majors in there against it. And what we're looking at here is that we're going into this announcement with the US dollar extremely weak. Now, that adds to the scenarios where if a number comes in strong, then the size of the short covering on the US dollar could be out normal. The size of it could be abnormally large. So you could see much bigger than expected moves on a stronger number. If it comes in weak, the appetite for selling more US dollars may be a little bit less than you'd expect, because we are near the key levels. The market is already stretched, and say, for example, the euro is already above 125 going into the announcement. That's it leaves little room. So the chances of the market breaking higher and then holding those gains on a day like today is less than, say, we were going into this announcement at 124 or 123. If the room to move, even if we are going higher over time, the short-term price action may be a sharp move towards 125, then a pullback towards a sharp move towards 126, and then the rest of the day profit taking. Okay, because those who have already bought the euro would use any extended rally, any extension post NFP as a situation, a chance to take profit. And so the short money is long, and that means that those guys who generally are in for small short-term moves would be taking profit faster than expected. So don't think that you can get the US dollar to collapse, or even on a weak number tonight. It's very unlikely, and it's just not how the market's generally structured these days. Alright guys, finally as well, before we do sign off today, Bitcoin is at its multi-month lows. We did break 10,000 early in the week, and we have been sliding lower since then. If you're looking at the price currently, we're down towards the 8.7. Now you do see the support that comes through at the 8,000 level here. Was a bit of a resistance barrier that took a while to get past. Now it should now turn into a support, and so 8,000 is the key sort of level that you want to be watching. It has been as low as 8.5 so far. Lots of negative stories out there regarding not so much Bitcoin itself, but just regulation around Bitcoin. So the regulation in India is going to tighten up. No, they're not going to allow it in stores to be used as tender. Also, you've got issues with the Tether story in the background, the cryptocurrency that was supposed to be one for the US dollar. They're asking where all the backing of that is. Where's the US dollars exactly? So that there's a backdrop of negative feeling about cryptocurrencies in general right now, as the price action is also quite negative. It's very hard to be confident that the market's going to turn around in the very short term. But the prices are getting very competitive, very compelling, and you might see some value soon in some of them. In regards to Ethereum and Ripple, those will be available for trading on our platform next week. So it'll be exciting times. You can come through and have a chat with myself about the levels that you should be watching on all the cryptos, or you can come through and talk with Jimmy Pan. He's our crypto specialist here, very experienced in the crypto trading realm. He can help you as well with understanding why the market moves and where it's going, and what the best opportunities are currently.